All right, guys, welcome to another episode of IPO Market Watch. And for those who are new, thank you very much for checking out this channel. This channel covers IPOs plus stocks already trading in the market. I basically cover the entire stock market. So I will review IPOs, I will review stocks that I think are biased, just like in this video. What I am going to show you in this video is a company that's already trading in the market. It's not an IPO, right? So it's a stock already trading in the market, and it is one that will make me money. It will. In my opinion, it will. I'm 99.99% sure that in 2024, I will make good money off of this stock. Before I get into the stock, let me tell you something real quick. When I first started trading on the stock market many years ago, or when I was going to start trading, I had this bright idea that I can just get in and out of the stock market on a daily basis, and that's it. I actually thought that that's the way it was going to work out. I didn't read much. I was sucked into the social media frenzy of people posting about stocks, but they never tell you a price entry. They never do. They never will. They can't. They don't know. They don't know what they're doing. They just say, you know, watch out for this. Guys, I have a feeling this is going to go to the moon. This could be it. You know, stuff like that. And then you just figure out yourself. And when you do, you get screwed. Right, and then when you get screwed, they'll tell you, "Oh, you should have used a stop loss." It's just, I don't know. It doesn't work like that for me. I don't know about you, and I don't want it to work like that for me. I don't want to get up every single day of my life and have the intense adrenaline of stress and depression and running every single day and checking out all sorts of things on a daily basis. What's going to go to the moon? What didn't? Oh, I lost money on this one. Let me get out. Let me put it, it's just, now, my opinion, I think day traders in the end up like this.
What am I doing? I am blowing Dodge. I'm getting out of town. Whatever you call it, I am running away from my responsibilities.
All right, I'm pretty sure you don't want to end up like that, right? Nobody does. Both the Fed and the European Central Bank are expected to cut rates by 150 basis points next year, giving investors hope that they're finally on the path to a normal economic environment of subdued rates and low inflation. According to Bloomberg Business, one of the biggest winners of this trend will be the real estate sector, which relies on low rates and low inflation. And lo and behold, people are going to start realizing in the second half of 2024 that the real estate sector is recovering. When they realize it, that sector would have already gained quite a bit from the beginning of the year. That's just my opinion. So the company I want to talk to you guys about is BNL. This is an industrial focused diversified net lease REIT that acquires, owns, and manages primarily single-tenant commercial real estate properties that are net leased on a long-term basis to a diversified group of tenants. When we look at BNL right now, as of the time of recording this video, it is trading at $17.19. The current price of $17.19, personally speaking for me, is still a very excellent, good entry point. Now, if you look on top of me over here, there's a JP Morgan upgrade that came out today, about an hour ago, and it says that JP Morgan upgrades Broadstone Net Lease to overweight, announces a $19 price target. And like we said, the stock is trading at $17.19 as of the time of me recording this video. In 2022, BNL's revenue was $407 million, as you can see here, which was an increase of 6.4% compared to the previous year of $382 million. Their earnings were $122 million, which was an increase of 19%. The great thing about this company, if you want to look at an overall real quick picture of this company, is that from 2016 to 2022, we can see the blue bars. The revenue is growing insanely. That's awesome. Every year, there's a huge growth in revenue, which is beautiful. And then if we look at the earnings, they're positive. There hasn't been a year since 2016 where they actually had negative earnings. They have positive earnings, and those are also growing, right? So we're on a good track here. Now, and it is also trading at a very cheap valuation of 16 PE ratio. I think that's very good. It is also very attractive because it has a dividend, and their dividend is very sustainable, and it's actually a very good dividend. We'll get to that in a little bit. It has a diversified portfolio. We'll look we'll look at that in a little bit slightly in a very general way. It also has a very solid debt maturity schedule, thus their earnings, right? It helps with the earnings being positive every year. It has a strong portfolio. It has diverse tenants. It has high occupancy rate. It has positioned itself well in the current environment. In fact, they've also positioned themselves in the database center by acquiring and leasing out centers for database companies, which that's a very good thing, right? That we know the database sector is going to explode going forward. It's just going to grow every year. We can also see here the long-standing operating history and track record of success delivering results to their shareholders, which has been amazing every single year. We can look at the portfolio diversification. So when I said it, we'll look at it in a very general, quick sense. This is it. So you can see the top 20 tenants. The property type diversification is an industrial at 51%. They have all kinds of companies from manufacturing, from cold storage, from food processing, distribution and warehousing. Also, the data center is going to be part of that going forward. Healthcare makes up 18%, restaurants at 14%, retail 11%, and the office at 6%, which is actually, I like that, to be honest. Now, I told you they have a dividend, and the dividend is actually $1.13 annual dividend, which is very good. That comes out to a dividend yield of about 6.55%. That's also awesome. The revenue, like we saw earlier, is increasing every single year. The total debt is at $2 billion, but easily manageable. That's the total long-term debt, and the company has positive earnings every year. Their net income is positive every single year, and it's getting better and better and better. The analyst ratings within the next 10 months, let's say, is anywhere from 17 to 19 US dollars. All right, so overall, what do I think? All right, the company is amazing. I think the company is going to benefit from what's going forward, from what the Fed will do with the economy. And I expect that the stock is in my opinion, is a buy right now. And in 2024, this company will be trading at 20 to 21 US dollars to be conservative. Maybe it'll go higher than that, but I expect that 20 to 21, that's what I'm looking at, to go from 1719 to 2021. Let me know in the comment section below what you think, and don't forget to hit the share, like, all that stuff, comment, because it really helps. Take care, everyone.